Gold and silver has posted a very strong recovery last week, where we have seen gold moving towards 2380, achieving the highs at now closed the week at 2360, while silver has also consistently stayed bullish towards 2880 before closing the week at 2820 levels. At the same time, the dollar index has also posted a little recovery and closed the week at 105. So now what to expect from these three? How to profit trading the metals, the currency as well. We're gonna see with the help of charts and indicators. This is a week I post and share twice a day updates of major global markets and commodities for gold and silver as well, where first update I always share with the Asia and Europe session, and next before the US session every day, twice a day, targets which help you to trade profitably. Thus subscribe to the channel and press the bell icon to get the notifications. Join the free Telegram channel for live market updates and join the channel memberships here on YouTube to support the effort. Do like, share and comment, friend. It is always a great motivation and support. Let's start. First we'll look into, at the end of every update I will be writing down the levels for you all so that you can all trade profitably. Let's see gold on the 4-hour charts. After the sharp drop here, it is consolidated here in the range and delivering lower highs, higher lows. It has given a breakout and it is still on the up move. It is trying to stay bullish, though we have seen last few candles of consolidation. But if you look at the move here, the drop, and it is still trading in this bullish channel. Thus it is very important now for gold to stay below 2350. The first target, that could be ideal selling entry in the coming week, but then also there are very strong support levels as long as 2310, 2300 levels are not breached on the downside. Ideally, the bearishness in gold is only if you see it is staying below 2310 levels. Yes, there will be bearishness. On the weekly charts, it appears that there is I will show you on the weekly charts that there is still a lot much of down move, but right now 2300 is one support it needs to break in order to confirm that bearishness. And right now on the 4-hour charts, if you look at it, is still trading in this bullish channel. See, moving averages have crossed over here, trading with divergence, bullishness, looking upwards. Then next observation, here is the lower highs which you are seeing and the lower lows which you are seeing, and this suggests that it is still in the bearish channel for near term. Let's have a further look. Stochastic was overbought. It is looking downwards, trying to cool down a bit. Look at MACD, rise, retracement, rise, retracement, rise, retracement, and now it was trading with divergence, trying to converge a bit. Unless and until it shows a crossover and reverses, we should not be treating this as bearish, else it is still lot much of a scope on the upside. RSI was overbought, trying to come out of the overbought zone, which means that there could be few bearish candles in the week beginning. Now coming to on the daily charts, let me take you to the distance parts. See, this was the lows, then the rise, retracement, then rise, slight retracement, then a bigger rise is seen here, and again it is retraced. Now after retracing here, we can observe that it has consolidated around 2050 period moving average for a while. After consolidation, in my daily update I have mentioned that it is giving a breakout and it is going to rise. That is what we have seen. A stronger bullish momentum has taken it towards 2380. But if you look at the last candle, just notice the complete move started from around 2346, it moved towards 2378-80 levels, and it is closed at 23. Now this is almost 50% or slightly lesser than 50% of the complete move. This body size is almost 50% of the complete move. This suggests that there is still bullishness, but I can see that bulls are not very much interested in keeping the prices elevated, and we have seen it closing below the 50% mark of the complete move. And thus in the coming week, first candle is what is going to be of interest to us, because see, if it opens lower and if it drops first below 2340 and then 2332 zone, we can say now that is the reversal in gold prices. And if you look at, this is the channel in which it is trading, it has to stay below 2320 and 2300 levels. These are the 4 key levels which will confirm the direction which gold wants to take. Only and only if you see gold trading below 2300, consider that as a reversal confirmation, and then we can look forward for gold to move towards 2270, 2240. As it is right now, it is still not bearish, it is still trying to look upwards. Second observation, what we have seen on the 4-hour charts and on the daily charts here is, just look at this move, a good bullish move. This is forming a nice flag pattern, hitting the lows, taking the support of this channel. It has moved towards the top. What has happened here? Now see, what has happened here, it has moved towards the top. body size was less than half, and then this reversal has appeared. Now this could be the phenomena which can appear again, and if this is the case, then we are looking forward to lower lows. Remember this fact, and that is why I said 2270, 2240 levels are going to be the targets next. So this is something we should notice, and any move beyond 2380 and 2400 levels is where you should consider that it is breaking out of this flag pattern, and a stronger rise is what we are looking at. Stochastic is rising now. See, MACD, if you observe, the MACD has traded bearish since long. Now it is trying to converge, and see, it was at 2400 plus levels at this point. It has come to 2360, but the MACD is still at bottom. So if it crosses over, you can imagine how high it can take the prices towards. RSI is rising. This is again a bullish sign here. Coming to week, if you look at the weekly charts here, rise, retracement, and it is again looking upwards. Then the next observation, it is beautifully respecting this bullish channel here, and higher highs and higher lows are seen. Thus, in the coming week, and also the preceding candle comes with a little wick on the upside. So now two things are very clear. 2300, 2320, this is the zone on the downside which we have to observe for gold with caution, because if it drops below 2300, that is the time you can say the bears will be aggressive and we can look forward to lower prices. Else what may happen in the coming week is it can try to start with slight bearishness and then recover strongly, and at any point of time gold staying beyond 2400 will take it towards the double top levels at least, that is 2430, and if it stays above 2430, we are looking forward to a very strong rise. We have to be careful here. Next, now why there is a possibility of a drop? There is only one observation on the weekly charts which suggests that there is a possibility of a drop. What is that observation? You can see the prices are trading divergent from the 20 period moving average. Though it is trying to consolidate or stay in zone and wait for the moving average to climb up, but right now if you look at the moving averages are sitting at around 2200 and 2150 zone. This is a zone where the maximum support lies for the gold, and thus if you see gold staying below 2300 and then 2260-40 zone, we can look forward to a drop towards 2200 and 2150 levels. Now 2150 is one milestone. Even if it tries to crash these levels, I do not see it taking or breaking soon. Now this is one observation. See, I always say that whenever instrument trade with too much of divergence from the moving averages, it always tries to converge. Look at the stochastic, this is falling sharp, this is looking downwards. The MACD, now interestingly, MACD, if you look, see the rise, the retracement, then slight rise and slight retracement, and then this stronger rise has appeared. If you observe this, this is almost at the top here, and now from here the possibility for it to converge crossover exists, but though it is not showing any sign here, but I will wait for it to converge a bit. Now what is the chances that where you can expect it to converge? Only and only if there is a bearish candle, and that is what makes us to say that if it drops below 2300, there is going to be a sharp reversal in gold prices, because see, too much of divergence here calls for it to converge, which means slight bearishness in the near future. RSI was overbought, it has cooled down, it has come out of the overbought zone, now again looking upwards. Coming to monthly, now look at the monthly chart. See, first of all, if you observe here, since last 20-30 years, you will find this was the first bull run for gold. We have seen it moving towards close to 2000 levels. Then it has stayed in the zone for months and years till the COVID times, and then the COVID rally has appeared. Now this is the second leg of consolidation where gold has retraced, it has stayed in this bearish channel, and see, now look at the movement here. If you observe the movement after breaking from this bearish channel, we have seen it showing first rise, retracement towards 20 period, second rise, retracement, and now this is the third and stronger bull run. So what is happening here is it can achieve the highs, but that will also mark the move that possibly in the coming month we can see it again retracing and coming down towards 2200 levels. It will wait for the moving average to climb up and then slowly retrace towards this. Right now it is looking upwards. If you look at the preceding candle, now that is also one of the observations here, is look at the preceding candle here. It has got a very small body here. Now, ideally, this should be a reversal confirmation. Ideally, we can say that gold should reverse from these levels. Why? See, the preceding candle comes with a bigger wick and a smaller body suggests that the prices were not willing to stay bullish. Now, since then, we have seen it rising. Let's see if it breaks past the preceding highs. Only and only if gold breaks past the last week's high or all the all-time high levels, you can say there is going to be a stronger bullish momentum again. And then we are looking forward to a stronger greener body. Stochastic rising here, the MACD is still divergent, it is still bullish, it is still looking upwards. Now this is one thing which I have shared earlier as well. See, the bearish phenomena is observed for almost couple of years or more, and then it has crossed over and it is looking upwards, and it has further potential for it to rise. RSI is rising as well. So now we have seen the charts and indicators. Time for me to give you the trading levels and strategies so that you can all trade profitably and comfortably. Before I give you the trading level, if you also want to learn this art of trading, where we are going to teach all the tools, techniques, strategies and trade cycles which we have curated with our years of experience so that you can all trade profitably, you should join my 31st mentorship batch starting 20th of May. Register yourself now. Reach out to me for details. My Telegram and email IDs are mentioned in the channel and video description. Else you can be part of my Signals channel on Telegram. For your queries, you can write an email or ping me on Telegram. Also, those who had asked me to recommend a broker which is safe, secure with global presence, which offers a swap-free account with the lowest spread so that you can all trade profitably and comfortably and preserve your capital, you can find the recommended broker link also in the channel and video description. Do join and enjoy trading. Now let's talk about the levels. I will recommend you to buy gold if you see it is staying above 2371.5. You can stay bullish from here. We can expect 2382, and once it stays above 2382, 2389.5, and then we will look forward to 2400. Now once in this month and in the coming week, any point of time, gold is staying above 2400. There are two key levels right from the double top to the median of it, which it needs to break, first at 2412 and then at 2428.30. If these three levels are taken, or these two levels are taken, then you can say now gold is turning bullish, and then we can look forward to 2450, 2468 and then 2500 levels. Possibility is there that it can try to move towards these. However, it has to break past two key levels on the upside. These are going to play a major role here. On the downside, where you should take a selling end. Now see, on the downside, 2354.52 is the zone where you can take a selling entry. But even if you're selling here, I will recommend you to wait for 2342.40. This is going to be the first target levels. Then 23. So below 2314 is 2300, and you can look at these levels are going to play a major role here. First, we have to wait for it to break 2340, and then these three levels, these are going to remain crucial levels here. Below 2300 is where we are looking forward to stronger bearish momentum towards 2270, 2260 and then 2240 levels. Below 2240 is where the bears will take over completely, and 2200 and 2150 in the month of May can be expected as well. But I do not see gold breaking towards those levels. Possibility of it to find a support exists. Even if it tries to drop 2270, 2240 levels are going to leave the greatest support for gold. So take your positions accordingly. Do like, share and comment. Now let's have a look at silver. Now see, on silver, if you observe one thing, this was the point from which the fall has started. We have seen it moving towards $26 levels, and see it has recovered almost all the losses from where it has started the fall. Now achieving the levels, it has failed to break. Now these definitely going to play a major role at $22.80, $28.80, $29 levels. These are going to play a critical role in the coming week as well. And if silver stays above 29, certainly we are looking forward to $29.50 and $30 levels again. Now if you look at the movement on the 4-hour chart, see moving averages crossing over here, trading with divergence and bullishness. The prices were divergent from the 20 period, and we have seen it converging here. Next is forming double bottom. Silver has started this rise, and thus it is staying in this bullish channel. Now the support levels here on the downside towards 27.75 and 28 is going to play a major role here in the coming week. And only if silver breaks below 27.50, 27.20 zone, you can say it is reversed and a stronger crash can be expected. Else it is still not bearish here. See the stochastic falling sharp. The MACD is in green trying to converge crossover for a sell. We have seen it forming double bottom, showing the rise. It can continue with this. Further, it has converged but not yet crossed over. Remember this fact. RSI coming out of the overbought zone, and that is why we can see slight pullback in the silver prices. Coming to daily on the daily charts as well, remember one thing, it is still showing lower highs, lower lows. After the rise, it is trading in this flag formation, and this is a bearish channel, and this is why also I say it is very important now for silver to break beyond $29 levels, which will confirm a breakout. What has happened here in the silver prices is, see the rise, the retracement towards 20 period moving average, then the rise and the retracement towards the 20-50 period moving. Now after taking the support here from the 50 period, we have seen first bullish candle, couple of consolidation, next bullish candle, couple of consolidation, and then we can even in fact expect a breakout here. Let's have a further detailed look. See stochastic is overbought here. Look at MACD. After staying bearish for days and weeks, it has now crossed over. We have seen it delivering two greener candles. This suggests that it may continue on the upside from here for a while, and thus if you see it is staying beyond 29, certainly we should not be thinking of selling silver, and we will look forward to a stronger rise. RSI comfortable here. Coming to weekly, on the weekly charts, moving averages are trading with divergence and staying bullish. We have seen it see first rise, then a retracement towards close to 20 period, then the rise and then the retracement, and it is now again starting to look upwards. Now see, one thing is very important, it is taking the support from the bottom of this channel, which is indeed a bullish channel. Also the second observation here is it is still in this expanding triangle zone. This is increasingly bullish triangle here, and thus as I say, once it stays beyond $29 levels, we can expect a stronger bullish move in the coming week, and this makes this zone very important at 29. So beyond this we can expect silver to move towards 30. Now see, it has retraced here, it has waited for the 20 period moving average to climb up. These are staying at around $26-25 levels, and if silver stays below 26.50 is where you can say it is trying to reverse, and then the stronger fall towards 26 and $25 levels will be seen. Yes, it is still, as I said, is still staying in this bearish channel, and thus as long as it stays in this, remember lower lows can also get achieved. And if you see silver staying below 26.50, 26.80 zone in the coming week, any point of time, you should not think of buying silver there. You can expect that a sharper fall towards 25.50 levels can also be, and in fact it can go lower. See stochastic dropping sharp, MACD is trading with extreme divergence and it is still looking upwards. Look at the move here, rise, retracement, and again a rise, so it may continue here on the upside. RSI is rising as well. Coming to monthly, on the monthly charts, what has happened? See, if you trace the movement for silver for the last few years, you can find this was the peak here for silver post financial crisis in 2009 2010. We have seen silver peaking towards $50 level. Since then we have seen this price is dropping sharp, and now it has stayed in the zone for years before giving a breakout with the COVID, and then also we have seen it delivering lower highs, then retracement here. After forming the retracement, see a couple of observations here, it is still getting resistance intact at $30 levels. See, it is very important for silver to break beyond 30, because once it breaks beyond $30 levels, we can say now this is on the path of a breakout where stronger rise can be seen. Largely saying, right now I can see, if you divide this into two, you can see it is almost symmetrical formation. Look at this, and thus the direction it takes, or if it gives a breakout, that should be the confirmation of a further rally in the near future. Stochastic is rising. Look at MACD, it has hit the bottom here, then crossed over, and it is still trading with divergence, and it still has lot much of scope on the upside. RSI is rising as well. So now we have seen the charts, we've seen the indicators. Time for me to give you the trading levels and strategy so that you can all trade profitably and comfortably. And yes, as I say, do not miss to join my 31st mentorship batch starting 20th of May. Register yourself now, else you can be part of my signals channel on Telegram. Write an email or ping me on Telegram for your queries, and join the recommended broker and enjoy trading with the lowest spreads. Now, First, let's talk about the levels. I will recommend you to buy here at 28.30, 28.50. Now this is the first resistance zone which silver needs to break. Once it stays beyond this, I will look forward to 28.75 and then 29. Now staying above 29 is where ideally the bulls will take over. If silver stays beyond 29, you can look forward to 29.45, 29.75 and then $30 levels. Any move beyond $30 levels, sky is the limit. We are looking forward to 31.5, 32 levels very soon, if not in coming week or if not in this month. Sooner it is going to stay beyond 32 levels very soon. On the downside, but remember, it has got very strong resistance on the upside. As long as $30 levels are not taken, do not treat dollar and silver as bullish. It has to break beyond 30 in order to confirm the bullishness. Now where to sell? I will recommend a selling entry 27.95, where you can expect 27.75, 27.50. Once it draws below 27.50, 27.20 first target zone, and then below that 26.80. Staying below 26.80 is where the bears will be taking over towards 26.50, $26, and then I will be looking forward to 25.40, $25 levels. Chances for this appears to be very less that silver is going to drop towards these levels. I do not see this happening, that silver is going to move towards 25, but these are markets. You have to take your positions with caution. So trade accordingly. Now let's have a look at the dollar index. See, look at the movement in DXY. After the drop here, it is traded in this bullish channel, then retraced, then again the top here, and it is consolidated here before looking forward to this drop. Then the next observation on the 4-hour chart is it has breached this bullish channel, though it is closed at the bottom of the channel. But I still say that it has to, for it to stay bullish, it has to break beyond 105.5 and 106 levels. If these two levels are taken, then only we should treat this as. Now also look closely on the 4-hour charts. Let me turn on the indicators as well. If you look at the moving averages, these have crossed over, trading with divergence and bearishness. Right now, the 20 period, 50 period moving averages are giving it a resistance. Thus, it is very important for the DXY to stay above 105.2, which may confirm its rise towards 105.5 and 105.6 zone. Beyond that, sky is the limit. Stochastic is rising. The MACD is still bearish, trying to converge crossover. See, this is the main trend still, and if it crosses over, it can continue to rise. RSI is rising as well. Coming to daily. Now look at the daily charts. Rise, retracement, rise, retracement, rise, retracement. It has retraced enough. Now what has happened? The drop was a bit sharper. At this point, I have mentioned that diminishing bearishness calls for it to reverse, and since then we have seen silver staying bullish, trying to achieve higher highs. Now it is very important for it to break beyond 105.4, 105.6 zone in order to confirm the rise, because beyond 105.5 is where we can again look forward to 106, and 106 is the prime resistance which it needs to break in order to stay bullish and confirm a breakout. Stochastic has retraced. It is now looking downward. The MACD has crossed over. It is still divergent. It is still bearish, looking down. But if you notice here, rise, retracement, a bigger retracement has happened, and a crossover here can again lead to bullishness. RSI has almost flattened here. Coming to the week. Now look at weekly charts. The rise, the retracement, the rise, retracement, rise, retracement. So it is very clear that it is still staying bullish. And then the next point is the resistance. It is getting at around 106, which is very strong. On the downside, the support levels from the 20-50 period moving average is strong as well at 104 and 103.6 levels. So these two levels, if the dollar breaks in the coming week, you can say now the bears are trying to take over. Else, if you observe the weekly charts, first of all, higher highs were seen in the preceding candle. This was the reversal, first bearish candle, and see, it is still a scope for it to continue on the downside. But right now, it is not suggestive of same. We have to wait. How long? See, if you see it is staying below 104.5, you can say there could be a bearish pull towards 104.2 and then 103.6, 103.7 zone. The stochastic coming out of the overbought zone. MACD is divergent, MACD is bullish, RSI is rising. Coming to monthly. On the monthly charts, remember one fact that it is being trading in this sideways channel. Now see, one must notice the drop here, retracement, drop almost towards the same level, and this retracement. So it is staying in the box. That is very, very clear. Second point, it has to break beyond 106 levels in order to confirm a reverse. Right now, what has happened on the monthly charts, it has delivered higher lows, and once it breaks out beyond 106, 106.1 zone, we are looking forward to a rise towards 107.2, 107.5 in this month itself. So now 106 levels becomes crucial resistance for gold in the coming week and in the month of May. In fact, 106, 106.2, let me include this zone. Beyond this, we can look forward to 107, 7.2, and in fact 108 levels very, very soon here. Yes, that should be a reversal confirmation. See, it has formed a tail and it could reverse as well. Now, look at the stochastic, this is rising. The MACD has stayed bearish, time for it to converge crossover. Let me show you something on the MACD has started to converge, it is not yet crossed over. If it crosses over, you can see a double top is what we are going to look at. RSI is now at comfortable zone. So now we have seen the charts, we have seen the indicators. Time for me to give you the trading levels and strategy. And before we proceed, if you want to learn this art of trading, do join my 31st mentorship batch. Join the mentorship batch and cherish the learning for life, as we share all the tools, techniques, strategies which we have curated with our years of experience. On the other hand, if you just want to trade as per the signals, you can be part of my signals channel. So write an email or ping me on Telegram for your queries related to the services. Now, first, let's talk about the levels to buy. If you see it, the dollar index is staying beyond 105.2. You can buy here. Wait for 105.45. The next resistance, 105.75, the next level. And then my favorite 106, 106.2 will appear. Any point of time, the DXY is staying above this and this, stay bullish, we will look forward to a very, very good rise, where we can look forward to 106.7, 107.2, and then 108 levels will be observed. Beyond 108, sky is the limit towards 110, which we are going to see in the near future. Right now, it is consolidating its position and it is not yet taken direction. On the sell, you can sell here at 104.85 levels. Expect 104.55, 104.4 as the first target zone, very strong resistance zone here, and then 104 levels. If the DXY stays above 104 levels, we can look forward to a stronger drop towards 103.6 and below that 103.2. If it drops below 103.2, stay bearish for 102.4 levels and then 101 levels. Remember, it is going to crash sharp if it stays below 102, 101 zone. Chances of the DXY to move towards these levels appear to be distant, and thus it is going to be important that how it behaves at around 104, which is going to be of great support for the DXY in the coming week. So you have to be watchful and careful. Take your positions accordingly. Like, share, subscribe, and comment. Join my mentorship batch. Join my signals channel. Reach out to me for your queries related to the services. Join the free Telegram channel for live updates and the channel membership channel on YouTube to support the effort. Thank you very much. Have a great profitable trading week ahead and a happy weekend. Do trade with caution. Thank you.